So if 60 million ounces was the main driver in that move in 2011, we've had 60 million ounces in the last 4 weeks alone.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight in our video, we are going to be digging through the rather mind-boggling SLV inflows, the amount of silver that is reportedly being added into there. It sure seems like a lot, which we will cover. Although before we get to that, I have a special announcement to make. Maybe if you see on the crest of my shirt there, we have a new sponsor to the show, which is First Majestic Silver. I'm sure a lot of you guys are already familiar with First Majestic, which is the purest primary silver producer out there, and certainly has been one of my favorites for many years going back. You may have noticed Keith Neumeyer was the only mining executive included in my book, The Big Silver Short. Largely, I've always had a lot of respect for how he's spoken up about the manipulation that we cover here so regularly. And just a fan of what they're doing, how they approach things, and excited to have them on board as a sponsor. In fact, it was nice. I have my 10-ounce silver coin I actually won at the Vancouver Resources and Investment Conference. You see a nice 10-ounce First Majestic. So a pleasure to have them on board. And we'll be keeping you posted about the things going on with First Majestic, including a deal that they announced just a couple of days ago. And we will cover that later in tonight's show. Although with that said, let us dig in now. Get my window the right size there, because here are the latest. Again, last week, another 12.7 million ounces added. And as a reference point, I like looking back to, in which we can actually pull up on the other chart here, because I'm sure probably everybody watching here tonight remembers in 2011, the price went up to $50 in a very short period of time. Let's see if we can get the 10-year chart here. Okay. So yeah, you see here in 2011, that's when the price of silver jumps from 25 right there, almost to 49. And you see a little bit back here, there's about 60 million ounces added between when Bernanke wrote his op-ed in the Washington Post, proclaiming the virtuosities of his money printing campaign, which by the way, now that Powell's doing the same thing again and was doing that before Corona, is this official confirmation that Bernanke's policy did not work. Anyway, they're going to keep pouring more on. But the point being, if 60 million ounces, and this is according to Ted Butler, I tend to agree with him, was the primary driver sending silver to $50. Then you look back to what's being added here. I mean, we're talking about 300 million ounces in the last year, basically. So there's where the rally began last year, slightly over a billion ounces. And now we're at 1.3. So maybe closer to, let's call it 280 million ounces. I'll get the exact numbers one of these weeks, and we can post that for anyone who wants the exact. But I mean, it's a lot put in context there. And you see these amounts here. And to put that into perspective, I mean, these chunks that are going in here, I mean, these are historically large. And if you caught Monday's episode, we talked with Craig Hemke, and him amongst others, myself included, are quite fascinated because we discussed the COMEX silver deliveries, which start in about 2 weeks. So that should be wild to see how that goes, especially just because so much gold has been demanded through delivery, historic amounts. So is that, to be clear, I don't know that you could, I mean, on some level that would count as a run on the COMEX. Whether that means we're on the verge of a break point, I don't know that yet. And I try to always be as clear as possible on things like that. I understand people are investing and and also excited about what's happening. So I think it's important not to put a date on something where not warranted, but on some level, it does seem like we're seeing some run on the gold. And I think it'll be an interesting data point to see if that carries over to silver. I mean, it looks like it's happening in silver, as you can see here. And here is the 4-week. So if 60 million ounces was the main driver in that move in 2011, we've had 60 million ounces in the last 4 weeks alone. So it's interesting to think about what will happen when at some point this will be resolved. There's either got to be some massive lie in the stockpile numbers or how much metal is claimed to be out there, or something doesn't add up. I mean, again, I didn't grow up with a silver bar in my crib and have some, unusual fetish towards silver. It's just as I kept looking through these numbers year after year, um, and again, I would take a lot of the numbers with a grain of salt. Are they actually adding 60 million ounces into SLV and the other trust? Well, if so, then that would seriously be pressuring an already tight market where you've had supply shut down for a big chunk of the year. So we'll see how that goes. But certainly, if you're long term invested in silver, I think the more you see data points like that, have to feel somewhat good about that. I understand the challenge in waiting, and I've had times where, especially when I was starting the business, where I didn't have income coming in and I had silver assets. So I know everyone's situation is different, yet gee, if you're able to have a long-term horizon and can shift that mindset to what I imagine China is thinking. All right, if these guys are giving us metal at reduced prices, we can see what's happening with the Fed. We can see the long term. So anyway, a little matter of perspective that sometimes I find helpful, and perhaps you may as well. Here you see 1.4 million ounces added into the gold trust. Again, you can see even that still a pretty big number. Um, and again, it's the data, but not just the data. The conversations I have, whether it's the mining companies, or just investors or fund managers. And I think part of it is that when you see headlines like this was from back on Monday, but the Fed says it's going to start buying individual corporate bonds. I mean, what are people supposed to think? I mean, we're not requiring PhD level analysis. The Fed, just each one of these bullets makes me want to buy silver. Previously, central bank had been buying only ETFs, just only the ETFs, and had said it would be buying individual issuance on the primary market. Um, Actually, maybe the Fed is buying SLV shares. Wouldn't that be interesting? Somehow, I don't think that's one of the ETFs the Fed is buying. Wonder how it gets decided which ones they do buy, but you get the point. I mean, I don't think people would have taken you seriously if you'd said, even 2 years ago on this one, that the Fed's going to be buying bonds, corporate bonds, ETFs. So we'll see how much longer they keep this charade going. Again, when I was pointed out to me the other day that the Davos conference, their theme was the Great Reset. I have their website up to dig into that one a little more, see what we find, and I'll report back. But I'm trying to be careful, but there's in my gut intuitive part sees all the things that are happening in the world, and to me it seems as if somehow this scheme feels desperate at this point. Again, I factor in, I've thought that for a couple years. So use the time to your horizon, and things will go actually pretty well. Here is another reason that if you use time to your advantage and frame things well, that silver is going to look really good at some point. Top primary silver mining industry production yield falls to the lowest ever. And for example, Fresnillo's flagship mine had seen its average yield decline from 15 ounces per ton in 2005 to only 5.3 ounces per ton last year. You can see you go a little further back. Or no, yes, okay, I was looking at the wrong number there, but 15 dropped to 5. And as Steve St. Angelo, who does a great job with silver data, good site to check out. And you see top 7 primary silver mining companies and mines. So you have grade going down, or rather yield going down. I mean, plus the grade world is running out of high grade. So then you had the supply going down, and it's just, let's get our silver price up here because it's just incredible to me. I mean, on one hand, let's pull up silver. Maybe we could get the monthly chart here. There's one hand, all right, we know it's a rigged game, and at some point, maybe the purpose is just to be able to handle that, not let that get you flustered on any given day. So that, and yet it's still incredible to watch these things unfold because at the same time we've had this, let's take it from, this is I think the last 3 months, if you count all those bars. I think that might be 13 of them. So last 3 months, you see record chunks of silver going in here. You see the story with with the yield down, grade down, the supply down. We've had bullion dealer after bullion dealer talk about how their demand has skyrocketed in these past months. And then here's silver, this month just started over $18, just drops, and all while the Department of Justice, who we'll get to in a moment, allegedly has an investigation ongoing into silver manipulation and precious metals manipulation. It's amazing that they've actually gotten guilty confessions of the crime, and yet it will be interesting to see if they, I'm assuming at some point they'll report something. They've already had guilty confessions. I would love to know if they have any comment on why the price acts like it does when you see any of the sources of demand. We've had Andrew McGuire on here talking about wholesale conditions in London being tight. And I get reports from around the globe, which I've been confirming in different areas. Not that silver is impossible to get, but we'll see whether it was supply chain things or where the metal's coming from. Although, anyway, on to a little mining stock news. Like I mentioned before, we have First Majestic, did a deal last week, acquires the silver stream on First Mining's Spring Pole project. I will put the link to this in the description below so you can take a look. I know we have a lot of mining stock fans in here. And basically, First Majestic acquires a stream on 50% of the payable silver produced from Spring Pole over the life of the project for 33% of the silver spot price per ounce to a maximum of $750 per ounce. Looks like they're expecting a total of 22 million ounces. And as you see here from Keith Neumeyer, President and CEO of First Majestic, the new silver stream gives First Majestic significant upside potential to higher silver prices while minimizing risks and costs. So basically providing some financing, and there's a few hurdles that the way the deal is structured will make an upfront payment upon completion and public announcement of the results of pre-feasibility study. First Majestic shall pay an additional $7.5 million. But basically increases their silver exposure, also gives them exposure outside of Mexico, some leverage, additional leverage to the higher prices, and some exploration potential as well. And one of the benefits is that now that First Majestic is a sponsor of the show, if anybody would like to reach them, fortunately there's some good friends of mine, Todd and Mark, in the investor relations department. And if you'd like to get in touch, have any investor questions, send me a message at chris@arcadiaeconomics.com and I will put you in touch. And fortunately, they're really good to work with and can answer any questions you have. If only the Department of Justice was as helpful as Mark and Todd are. Here, I thought this was funny. You may have seen this. Former Bumblebee CEO sentenced to prison for fixing prices of canned tuna. So, so this guy, Christopher Leszewski, former CEO and president of Bumblebee, was sentenced to serve 40 months in jail and pay $100,000 criminal fine for his leadership role in a 3-year antitrust conspiracy to fix prices of canned tuna. So it's good to see. Now we know why the silver price has been held up. I mean, you you got to get those canned tuna guys off the road. I mean, that's dangerous shit out there. So I can see it makes sense now why the Department of Justice has been busy saving us from the canned tuna crisis, which the Fed was going to make more expensive anyway. But let's. Well, actually, I would not say there is no news on the Department of Justice investigation into precious metals, but we find out that the guy leading the investigation, Assistant Attorney General Brian Benkowski, let's say there, is quitting. So Brian has served the department with distinction, but now he is leaving, and I didn't see any comment about the precious metals in here and how that will affect things. This was actually a note Ted Butler passed along in his column, I think the one over the weekend. I was rather shocked to hear that. Maybe the guy just had other things to do, but certainly a little. I don't actually. Maybe I will refrain from reading into anything that without knowing more, and hopefully we'll see some sort of comment. But interesting that the guy who was running the investigation will be resigning effective as of July 3rd. So a couple weeks away. And here it's interesting because I heard that he was running the investigation. I wanted to verify that. So here's a press release from last year, and there's a few things in here that were quite exciting. One, oh yeah, here. This is the plan. We encourage banks, proprietary trading firms, and other companies trading in our markets to identify this contact and voluntarily self-disclose it to the department, the FBI, the CFTC, and the other regulators, rather than wait for us to find it on our own. So, if any of those bullion banks out there are committing felonies, perhaps, I don't know, such as the Deutsche Bank case where you have traders providing transcripts of, not just within one bank, but in between banks, I think that constitutes collusion. If we have any lawyers out there, you let me know. So they actually did self-report. Some of the banks actually were so blatantly caught that they kind of self-reported, but the CFTC is hoping that anybody else will turn themselves in. Maybe they're counting on the Department of Justice, but I thought that was kind of interesting. And yeah, here's the other one that I just wanted to mention before we wrap up for tonight. They also defrauded clients who bought or sold barrier options. They did this by trading precious metals futures contracts in a way that sought to push the price towards a level at which the bank would make money or away from that level. As a former option trader, certainly if you can move the stock to a specific price, so let's say you sell calls and puts on 17 strike and you can push it to 17, you essentially sold a lot of insurance policies that would have defaulted, but you rigged it, actually incredibly similar to what Goldman Sachs did to Michael Burry, that brilliant last scene of The Big Short, where he goes in there and they tell him his marks have finally been adjusted. And he says, well, I think what you meant to say was, now that you've established your own position, you're finally marking the stuff properly so that you can make money on it too. Um, and I've heard over the years, I'm planning to dig more into if you can game those option expirations. Um, because I do believe, and we've seen the price get hammered pretty good on a bunch of them. So anyway, there is just the evidence of that. So with that said, I appreciate you watching as always. Hope you're having a great night, having a great week. Hope silver is finding itself your way. And again, if you'd like to find out more about First Majestic, who I mentioned as our new sponsor of the show, well, there's a video from an interview I did with their CEO, Keith Neumeyer, coming your way now.